This stock could double in 3 years. It's a stock that I own in my portfolio. I talked about it before. It's not really a tech company. So if you guys have a lot of tech stocks, you're looking to diversify away from tech into some stocks that could do well if the market is struggling. It has a mind of its own. It doesn't really correlate with the S&P 500 or anything like that. You would really like this stock very, very much. And I believe it's presenting a very good opportunity at this price relative to how much the market is up from the lows. I think it's presenting a very good setup. So I'm going to talk about it today, and I really hope you enjoy it as always. And this stock is LNG, which is Cheniere Energy. Cheniere Energy is up around 6.5% on the year. It's up 46% over the last year. I started talking about it at 160. Now it's trading at 235, and I believe the stock is likely going to $400 per share by 2027. It could be a little bit more than $400. So I'm going to let you know why I believe this is going to happen and why I own the stock, why I like it very much, and I believe you're really going to enjoy it. But Cheniere Energy has the largest liquefaction facility in the United States, the second largest in the world. They liquefy the LNG, liquefied natural gas, they liquefy it, and they ship it all over the world to South America, to Europe, to pretty much everywhere, Asia, but most of it, as you can see here, does go to Europe. Then Asia is the second largest, then they have Latin America, and they have a few other places. But Europe is, of course, the largest one over here. Now, I know what you guys are thinking. You're thinking that you don't want any exposure to commodities. Natural gas is very volatile. It goes up a lot. It goes down a lot. You don't want any exposure to natural gas. It's just too volatile. But Cheniere Energy isn't really a natural gas bet. It's not really a bet on the commodity itself. It's more on the bet of U.S. exports of natural gas continuing in a major way, and they will likely continue, as a lot of those trade deals that are happening right now are including a lot of shipments of U.S. natural gas all over the world. And a company like Cheniere Energy has very long-term contracts, around 17 years worth of contracts. And it's not really a bet on the commodity itself, but it's more of an infrastructure bet on those companies. And this is what the CFO himself explained to me last year when I talked to him through an email and I was trying to get to know the company. He told me, we are protected to the downside given our contracts are fixed fee, take or pay, with investment-grade counterparties, with a weighted average remaining duration of 17 years. These take-or-pay contracts provide the visibility into future cash flow that you mentioned due to their effectively bond-like cash flow profile. Beautiful. He said, we do not foresee major price disruptions to Henry Hub, but have a high level of insulation from commodity price volatility due to the contract structure outlined above. Ultimately, because of this contract structure, we view Cheniere as a long-term contracted infrastructure story with minimal commodity exposure. And this is how they structured those contracts. Last year, they structured a contract with Galp, and Galp has agreed to purchase 500,000 tons per annum from Cheniere Energy for up to 20 years. And this is not expected to happen before the early 2030s. This is how much demand there is for U.S. natural gas, liquefied natural gas. And Cheniere is building a few facilities. Some of them will not be operational before 2028. So this shipment will start in the 2030s with a 20-year commitment. This is the kind of demand that this company is experiencing in the United States and the demand that U.S. natural gas is experiencing in general. The company is well known for being shareholder friendly. They buy back a lot of stocks, they lower shares outstanding, they raise the dividend, they lower the debt, paid off the debt. They're very disciplined in terms of capital allocation, and they love returning value to shareholders through the dividend, but most importantly through buybacks. And the company has something called a 2020 vision. The 2020 vision is to deploy $20 billion to buybacks and dividends over the next few years by 2027, and to reach $20 of DCF per share by 2027. DCF is distributable cash flow per share. You have to use their own cash flow DCF kind of metric because they own another company called CQP, which is like a midstream company, and it complicates a lot of things. So if you want to know the real cash flow that Cheniere Energy is producing, you have to look at their DCF per share, which is distributable cash flow per share. And they plan to spend the $20 billion to raise the dividends, but most importantly, buy back 15% of shares outstanding by 2027, gets them down to 200 million shares, and they plan to get $20 to $22 of DCF by completing their expansion facilities that they are working on. They will be able to ship more volumes. They already have contracts for them. They don't even need to find new buyers. It's all contracted out for 17 to 20 years. They just have to finish the facility. This is the kind of demand this company is experiencing. So they could get 20 to 22 DCF. Now, if I look at the price to free cash flow chart, recently it has been a little bit of a glitch. It's sitting at 33 times. It's not really at 33 times. It's more around 20 times cash flow multiple. But the average is 17 times. It trades around 20 times over the last few months. And the average has been 17 times, sometimes as low as 16 times. But if I'm using my model, I'm going to use 15 to 20 times. I believe it will likely be at least 20 times, if not more than 20 times, in my opinion. Now, if we assume that Cheniere does reach the 20 DCF by 2027, and I believe this is easily possible, easily achievable, because they're so far ahead of schedule on the expansion and they're buying back more stock than anticipated. But assuming they get to 20 DCF by 2027 and we time it by a 20-time cash flow multiple, which I believe is extremely fair and likely conservative, I'm getting $400 per share on Cheniere Energy. If I divide it by the current price of around $230, I'm getting 73% on the upside over the next 2.5 to 3 years. This is massive, massive upside on a company like Cheniere Energy. Now, even if I use 15 times, although I highly doubt we're going to get 15 times, but if I use 20 times 15, I'm getting around $300 per share, and the stock is still trading at only $230 per share. But for me personally, over the next few years, 2027, I'm seeing at least $400, $450, maybe even $500 per share on an amazing company. You could say recession resistant. It has a mind of its own. It doesn't correlate with the market. This stock has kept me alive this year. One of the stocks is Cheniere Energy, and I like it very, very much. Now, the biggest concern around the company was that what if China halts the supply or the imports of U.S. natural gas? What's going to happen to Cheniere? Well, if you look at Cheniere, there's so much demand for their gas, it's not even funny. But if you look at their shipments, most of them are going to Europe. Very little is going to Asia or to even China itself. So despite China halting the imports of U.S. natural gas, the company put up amazing numbers in Q1, and they even raised guidance. So this is not as big of a concern as a lot of people were telling me in the comments. It's just a beautiful business model. If China doesn't want them, Europe wants them. Other countries want them also. It's just an amazing, amazing business model outside of tech. And I see 73% on the upside over the next 3 years. But I personally believe it will likely be close to 100% on the upside over the next few years. And by the way, I'm using FinChat to use those charts to come up with, forward PE ratio, forward free cash flow multiple. And if you want to try it out, they give you 2 weeks of free access if you use my link in the description. So I really like this platform. And that's my thesis on Cheniere Energy. If you want to know when I'm buying something, when I'm selling something, everything I do in the market, I share it all in my own investment group. This is the link if you're interested. So thank you for watching. Not financial advice. Hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.